welcome back. Welcome back, everyone. And just to remind the audience and those outside of this facility, there is the ability to ask questions by mobile phone. And to have your question considered, please ensure that you provide your name and company. And the questions can be text to +61 466 185 469. That number is on the live stream for people to focus in on. We're lucky enough in this session to have Northern Star and Saracen presenting together, which seems most appropriate. From Northern Star Resources, we have Bill Beermont, the Executive Chair, and Stuart Tonkin, CEO. And from Saracen, Raleigh Finlinson, Managing Director, and Morgan Ball, the CFO. And I'd now like to pass over to Stuart Tonkin to start the proceedings.
All right. Thank you, Michael, and thanks to Geology for as being the lead sponsor for our Diggers event today. What an extraordinary recent period in West Australia's history. Last year, I stood here and was speculating we were entering a multi-year bull gold market. And following consolidation amongst gold majors, there were gaps left in the investing landscape. That created an exciting opportunity for Northern Star Resources. But what came next, no one was prepared for. So 2020 has thrown up some challenges, but as expressed by the Premier this morning, it is the fabric and resilience demonstrated by the resources sector to overcome and adapt adversity. And that has held our industry, our state and our nation in a unique and fortunate position. I would like to thank Diggers and Dealers, owners Miles and Sharon, as well as Suzanne and the Diggers team to navigate the logistics to enable this conference to proceed. And I would also like to acknowledge the flexibility and unique presentation format this morning and West African Resources for your flexibility as well. Thank you. So like the unique combination announced this week with Northern Star and Saracen merger, we have combined our presentations today. I will be presenting the Northern Star 100% assets. I will then pass to Raleigh Finlinson to present the Saracen 100% assets. Then Raleigh and Bill will present our prestigious asset, 500 metres over there, KCGM, and then go further into the details of the merger of equals that's been proposed and announced this week. And we'll offer the opportunity for questions and answers towards the end. But for us, the extension of that is really, and the value creation is to amplify the combination of these two businesses, and we hope we can portray that to you today. So now I'd like to proceed. There's some slides for Keith to read. Right. Northern Star operates as a business first with a portfolio of Tier 1 assets in Tier 1 jurisdictions. And you heard it from the Premier this morning. Why is that so important? It simply reduces risk for investors based on major geological camps in stable and well-governed jurisdictions. We differentiate the sector by providing strong organic production growth, lifting production 40% over the next 3 years to 1.25 million ounces, and whilst reducing our costs by 10%. We differentiate the sector in this regard, and we maintain a robust balance sheet, net cash of $70 million, last year record free cash flow of $423 million, and we have been dividend paying for the last 8 years. We continue to invest in exploration, and we grew our gold reserves 102% to 10.8 million ounces and resources 67% to 31.8 million ounces, which is one of our foundation skills, growing resources and reserves per share. And as we well know, if you do not drill, you do not find, and if you do not find, you do not mine. Organic growth is rare in the current investment landscape, and you're going to hear this over the course of this conference. Flat is the new up. We have a proven track record to deliver production growth, lifting 76% in the last 4 years, and we have mapped out 40% growth over the next 3 years, largely led by continuous investment in our people, technology and innovation. we have one of the lowest capital intensities for our sector and for our peers. It is important to note that it is not growth for growth's sake, and we couple our production growth with growth in mine lives, growth in cash flows, growth in dividends, and maintain superior financial returns for our shareholders. So now to Pogo, a very different place to Western Australia. Our midpoint of our guidance there is 200,000 ounces this year, and with the current COVID restrictions, we are tracking at the top end of our guidance range with plus 50,000 ounce quarters. But the growth at Pogo is just getting started, and with production lifting to 300,000 ounces over the next 2 years. This is achieved through the development of multiple production horizons in the underground and bringing all of these 5 zones into the new mining method of long hole stoping. In parallel to the underground, we are upgrading the processing facility there from 1 to 1.3 million tonnes per annum, which is 60% complete already, and will be available mid-next calendar year. Despite the reduced drilling this year, as we minimise crews on site, we hold a reserve of 1.5 million ounces at 8 grams and a significant resource of 6.7 million ounces at 9.8 grams. That's impressive resource grade. And under the 2 years of ownership, our geological knowledge has increased, and our view that this is a camp-scale system is demonstrated with the exciting prospects across the claim blocks. Our Goodpaster discovery is being drilled presently, and we have defined over 2.3 kilometres of strike with the extents open for that system. And Pogo is already a plus 10 million ounce endowed gold system, and it's only 14 years young. I would now like to extend a massive appreciation to the Pogo team in managing the COVID impacts in Alaska and prioritising the health of our staff and the communities in which we operate. Now to our Yandal operations. Our Jundee mine in the northern Yandal belt is productive and low-cost operations, which achieved 300,000 ounces last year at an all-in sustaining cost of $1,095 an ounce. Jundee consists of the 2.2 million tonne per annum underground and supplements with open pits to fill our expanded mill capacity of 2.7 million tonnes commissioned last year. It also has significant long-life infrastructure to support that operation for many years. Our reserves at Jundee are 2 million ounces at 3.7 grams. Our resources of 5.3 million ounces underpins a long-life asset, and with 15 underground diamond drill rigs active, there's a lot more to come from Jundee. Our guidance there this year is 270 to 300,000 ounces at an all-in sustaining cost of $1,200 to $1,275 an ounce. But the exciting growth at the Yandal is the advancement to production from the expanded tenements acquired through Echo Resources. With initial baseload from Julius and Aurelia pits, we intend to grow production by 100,000 ounces to deliver Yandal operations to a 400,000 ounce per annum centre by FY23. We have processing studies to advance the refurbishment of Bronzewing plant, or alternatively expand Jundee to enable a 5 million tonne per annum capacity. And as we look forward to the potential merger, further synergies are unlocked through the combination of Thunderbox infrastructure at the southern end of the Yandal belt. And we have committed $157 million of capital over the next 2 years to fund that growth. And the combination of Yandal operations has reserves of 2.8 million ounces and resources of 6.9 million ounces. Now to the mines that surround you here today, our Kalgoorlie operations. We hold an extensive reserve of 1.6 million ounces and resources of 6.8 million ounces in this region, and maintain strong leverage to gold price at an average grades of around 3 grams per tonne. Our guidance this year is 270 to 300,000 ounces at 1650 to 1750 Aussie dollars an ounce. Last year we achieved 317,000 ounces at 1564 an ounce based on utilising third-party toll mills. So again, when you start looking at the proposed merger, milling capacity is the constraint at the moment, not resources and not gold. There is further emerging discoveries to the north and south of our tenements that provide mine life extension visibility and bright future for the goldfields. Now, if I could sum up Northern Star culture to our raising the bar and driving performance with one single example, it is in March this year, in 2020, our Millennium Development crew achieved a world record lateral advance of 1,033.4 metres in a calendar month. And that was done with a single jumbo crew who did all of the ground support and all the boring activity. And I would go out on a limb to say that is nearly 5 to 6 times the world average jumbo development per month. This is a phenomenal achievement, something we're very, very proud of. And finally, I extend thanks to our staff, our business partners and the communities in which we operate that have not wavered in the changes that we've made to protect the lives and livelihoods during this pandemic. I would now like to pass to Raleigh Finlayson to discuss Saracen's assets.
Thank you, Stu, and thanks again to Diggers and Dealers, Sharon and Miles, for accommodating us. To Richie Hyde, the mighty WAFs, thank you for slotting us in. I've agreed to escrow my stock forever in return. And it's great to see Nick Georgetta here, my idol. And I call him the GOAT because he's the greatest of all time, and it's fantastic to see him back here at Diggers and Dealers. So just on the Saracen Foundation assets, first of all, on the left-hand side, you can see the map of Western Australia. So throughout COVID, having all of our assets within 300 kilometres of each other in the heart of Western Australia has been to our benefit. And if we think about the merger moving forward, expand that circle to around 500 kilometres, and we'll have 1.7 million ounces of future production coming out of the heart of Western Australia. On Saracen as a business, you can see there 8 years consecutive of meeting or exceeding guidance, which is our core value. And more importantly, we have growth across all of our production centres, so KCGM, Thunderbox and KCGM, which I'll step you through, doing around 600 to 640,000 ounces during this financial year. What's important about that organic growth, the only other company that I can think of, number one and number two, would be Northern Star and Saracen on that future growth profile, which obviously is more of a compelling reason why we're bringing the two companies together. Just moving briefly onto KCGM. So we're doubling production from where we were here 6 years ago, up to 250,000 ounces. So in the early years, we were 100% open pit mining. Over the journey, we've actually increased our underground production, mainly from the Karari and Dervish mining centres, to the point where we're now completely filling our mill from those two ore sources, which has meant that we, this time last year, we committed to an expansion of our milling capacity there from 2.4 million tonnes per annum to 3.2 million tonnes per annum, underpinned by the fact that we have 17 million tonnes or over 10 years of open pit material order in reserve to fill that expanded capacity. Jumping across to our Thunderbox operations, so 100% reconciliation. In fact, after this year, it's jumped up to 104% reconciliation since we first started this project in 2015. Our entire reserve statement across all of our portfolio is underpinned for 7 years, 100% in reserve, which gives us a really good comfort around the future. I'll talk about the Thunderbox deposit in a minute, but just zooming back out for a second, the exciting projects from a satellite perspective is Otto Bore and Wonder North. Both give us great drill success in the last 12 months. And as Stu mentioned, just to the north of that map, you can see there is the very southern end of the Northern Star Yandal belt, which I'll show you what the combination looks like in a minute. One of the other very key ingredients around the merger, Saracen has gone long in our future proofing. So investing money now with strong prevailing gold price to underpin and secure us through the future, regardless of what the gold price is. What this merger enables us to do across the portfolio is to optimise the allocation of that capital. There's lots of work to do over the course of the next 12 months to fully optimise that, but what we have got is significant opportunities that are frankly very few of those are fully reflective in the $1.5 to $2 billion of MPV synergies that we've articulated to the market this week. Just finally on the Thunderbox deposit as a long section, 4 years ago I stood up in front of here and talked about the C-Zone open pit. Pleasingly, we finished that pit within a week of when we articulated 4 years ago. We've mined 104% of the metal and it's delivered exactly like we said. It's done what it said on the tin. Very similar to the A-Zone open pit that we mined prior to that. Underground development on the left-hand side, you can see we've had the benefit of actually putting in 10 levels of development before we've pulled our first stope, which happened during this quarter. So we're well advanced and well invested in the future of that asset. And we've also got a better part of our development ahead of us in the next 3 or 4 years as we get into the better widths and better grades of that deposit at depth. Also pleasingly in the last 12 months, huge success coming out of the D zone open pit, which you can see on the right-hand side there. Continued great success with the drill bit. It means that we're replicating D zone similar to what we've done with A zone, where we continue to get a lower strip ratio and increase in grade over the course of the next 5 years, to the point by FY25 we've actually grown our ore stockpile there by in excess of 200,000 ounces. So what I'll do now is I'll step across into KCGM. I'll present the first part of the presentation, and then Bill will step in focusing on the open pits and the life of mine planning and the geology, and then Bill will present the exploration upside and the underground that we see as a dynamic future of this asset. So located in the heart of Kalgoorlie, we've been operating together for 3 quarters, just finished our 3rd quarter, so 9 months. And every day that relationship's built stronger. From the moment Northern Star came on the scene, there was immediate trust within each other. Saracen focusing on the open pits and the geology, and Northern Star focusing on the mill, procurement and the underground. One of the key landmark milestones that we've hit recently is a circa 50% increase in reserves to close to 10 million ounces, and also close to 20 million ounces, another 50% increase in resources, which underpins a mine life through to FY34. To give this asset some perspective, 85 million ounce gold endowment, that's combining historical production and what's left in resource and reserve. To put that into context, I just ran you through the Saracen and Thunderbox deposits. So if we combine every single one of those deposits, all 27 of them, across a 500 kilometre strike, there is more gold in this golden mile than across our entire portfolio. So hence why compelling this merger is, but also why we're both so keen to obviously advance this asset and give it the investment that it's due, particularly in exploration. From a production profile perspective, what this shows you is a de-risked mine plan, and I'll step you through the schedule in a bit more detail in a minute. So steady production, which we've done over the last 3 quarters, continuing for the next 3 years. That increase in production profile was through grade, particularly as we start to access the Golden Pike North area after our 3-year wall remediation, and also as we get into the Fimiston South deposit, which I'll step you through in a second. Most importantly, the production profile I'll show you on the next slide shows you the mining sequence to FY34. What we're showing here is actually the better part of Fimiston South, where we've got declining strip ratios. An increase in grade for the 7 years post here is not actually shown in this production profile, and nor is the Fimiston Underground, which is the next exciting chapter for this asset. Just importantly, looking at the overlay of the asset, what you can see there is a golden mile, the super pit itself. What's intriguing us and getting us excited about what the future looks like here, as we head further to the north, to the left, you've got the Croesus, the Mount Charlotte Underground and the Mount Percy. So there isn't a single resource quoted further to the north of Mount Charlotte, so none of the Mount Percy mineralisation is yet in the resource statement. So that's something we continue to work on. So we see that gold endowment continuing through the north, not only at underground but also open pit potential. The stockpiles, that's 125 million tonnes of stockpiles sitting on surface there, so significant opportunity on current milling capacity. That's 10 years of surface stockpiles to come through that processing plant over the course of the next 2 to 3 decades. And very exciting this morning is the approval that the Premier announced for Fimiston South, which is that dotted outline there. So previously we had contemplated, as per the schedule, 2-stage mining for Fimiston. So you can see Fimiston South Stage 1, Fimiston South Stage 2, with Fimiston South Stage 2 not scheduled to commence until FY23. So that was purely an approvals-led decision. What the EPA approval coming forward to now enables us to do is to potentially re-optimise and resequence that Fimiston South, which again, very similar to what we're talking about with the merger discussions, is something that we'll focus on over the course of the next 12 months to fully optimise this asset as well as the entire portfolio. So on that note, I'll hand over to Bill to run you through some of the exciting exploration upside of this asset.
Thanks, Rel. We have a saying, the best place to find gold is next to a gold mine. And what's I can't believe is we're finding new lodes inside an operating pit at KCGM. That is seriously crazy. This FIM South is, a large deposit. Sorry, I've gone one for. Drilling has significantly grown the system at south and at depth. Our resource and reserve update earlier this year, 3.9 million ounces of that reserve addition come from FIM South, which was the great work from previous owners over a number of years, growing that resource and then converting into reserves. Of particular interest is the saddle and the pit. You drive over this, the haul packs drive over it every day, every shift, and some stunning results there. We put these out earlier this year, 24 metres at over 2 ounces per tonne, which is extraordinary, a new load inside the pit. And 4 metres at plus 16.8 grams as well. And these results really have the potential to remove this saddle or substantially reduce it. So that's work we've got to do. And what this is basically saying is FIM South is going to really have a lot of success and underpin this operation and the town of Kalgoorlie for a number of years. And when we look at the capital, and as Rel said, we need to optimise this in the coming 12 months of how that fits in with staging. But I can't believe we're allocating basically about $400 million of capital over the next couple of years, and we're bringing that 3.9 million ounces into the mine plan. And when you look at that as a return on invested capital, that is simply stunning. And again, these are great quality ounces, low strip ratio, great grade, and they literally go straight into the mill. So we're super excited about what the FIM South looks like, and a great result with our EPA approval that we announced last night. And thanks to the regulators working with the KCGM team to get that done. That was an extraordinary effort. Big chunk of the reason why we, Northern Star that is, originally got involved in this project is we saw huge underground potential at Fimiston. And as Rel said, it's produced a lot. 65 million ounces has come out of the Fimiston lodes itself at about 5 grams. So that's around about a 50,000 ounce per vertical metre ore body. So to put that in a little bit of perspective, for every metre you dig, you pick up $150 million worth of revenue, which is extraordinary. And historical walkings, they go down to about 1,400 metres. Picture back in the early days, it would have been very hard to get ventilation and pumping down at that. We know the ore body continues at least 2 kilometres below surface, and that's a fantastic result. A lot of great interceptions that put out there, and one of the highlights from a resource reserve was basically a maiden inferred resource that we put on the Fimiston underground a month or two ago of 2.2 million ounces at 2.8 grams. So this is the first resource from an underground on this operation at Fimiston for a very, very long time. One of the things we've allocated in this budget is we've put in about $10 million, and that's for activities to establish some preliminary access to be able to get some drill platforms to continue to drill out this underground opportunity. We have a processing plant on one side, and of course we have the town of Kalgoorlie on the other. So it's been a very difficult operation to drill out from an underground perspective. But this establishment of $10 million of access and declines and portals will start that process. On to Mount Charlotte, and there's a few people in this room that did the site visit yesterday, and I think we're left with a very impressive attitude and perspective on Mount Charlotte. Mount Charlotte, you see the head frame on the edge of town there. This really has been the forgotten child. It's a bit lost up against its big brother, but under the new ownership, that's not the case. It's a fantastic asset. When you look at it, over 5.5 million ounces has come out of this ore body to date, and there's a current resource of about 1.9 million ounces there. So you're looking at a system in the order of 7.4 million ounces and will continue to grow. So on any measure alone, that is a world-class asset. We've put a strong emphasis on exploration in and around the Mount Charlotte ore body. It's predominantly been the Mount Charlotte and the Reward and the Maritana ore body that have driven the historical production, probably of 4.5 of that 5 have been the mainstays of the operation. As soon as the drills went out across the systems, we found gold in every single rock type, and any geologist in the room would know there's multiple rock types in the Golden Mile, and the Fimiston lodes and the Mount Charlotte lodes and Unit 6, 8, 9, 10, and I'm sure they're going to find 1, 2, 3 as well. But there's multiple structures, and we're finding gold everywhere we drill there. In fact, we'll probably drill out our full year budget by the end of this, by Christmas. So I'm sure that Emma and her team are going to ask for more coin. We're upgrading underground infrastructure, that's underway. We've been rehabbing quite a bit of the old decline there, getting it up to modern day scratch, so that's all gone well. We're really committed to, again, spending money in this budget, establishing drill drives to get access to test these high quality targets. We've found multiple lodes there. These will come into the mine plans in years to come. Productivities are greatly increased there. When we picked up this asset at the start of this year, the underground was doing about 1 million tonne per annum. Fast forward 4, 5, 6 months later, we've increased that productivity now at an annualised run rate, probably in excess of 1.5. And I think in the month of August, we broke a record there of 167,000 tonne of ore for the month, which is an extraordinary run rate. Rob Parsons and his team there have done a brilliant job. And the workforce has been super receptive to change, which is greatly appreciated by everyone. It's made the Saracen and Northern Star teams, really hit the ground running. The acceptance of KCGM workforce overall is fantastic, and it enables us just to concentrate on the macro view, improving the mine plan like Raoul has done in the open pit, getting those productivities up. It's been a fantastic result, and we really appreciate the support of the workforce on that. Now I'll hand back to Raoul.
Thank you, Bill. So I'll talk now about the proposed merger of equals that we announced this week. And I'll summarise it in a sentence, a compelling combination as per this title. Bill just mentioned about what we've been able to achieve as partners at KCGM. Talked about the uplift we've seen in underground mining. Open pit similar, there's been a 100% increase in mining productivities there. Unit costs have come down about 38%. So it just shows you, with a can-do attitude that both companies have been able to bring to the table, what we've been able to do at this asset, and obviously what we're looking to do here is do this across our entire portfolios. So as I mentioned at the outset, both of these companies have got very strong organic growth. So there's 1.6 million ounces of current combined production with a very clear organic growth pipeline to 2 million ounces. Most importantly, all of our assets sit within Tier 1 jurisdictions, which I'll touch on again in a minute, with the heartland of Western Australia, as I mentioned at the outset, rising to 1.7 million ounces, and of course the ever-growing Pogo operations in Alaska, contributing up to 300,000 ounces as we move forward. A significant resource and reserve base, so close to 20 million ounces in reserve and around 50 million ounces in resource across the portfolio, and 3 relatively simple hubs. So the Kalgoorlie operations combining KCGM, Northern Star's Kalgoorlie operations and Saracen's Saracen operations targeting 1.1 million ounces. To put that in perspective, if that Kalgoorlie operations was a company in its own right, that would be a top 10 gold producer globally. The Yandal operations, which is combining Jundee, Thunderbox and Pogo, that'd be nice, and Bronzewing, and of course the North American operations, which is Pogo, which we see as an absolute beachhead for future growth into the future after we ramp up to 300,000 ounces. So as a group, rising to 2 million ounces. But the rationale, I'll step you through. So it's logical as far as assets. Firstly, Tier 1 jurisdictions, as I mentioned from the outset. More importantly, it's a grouping of those assets in a Tier 1 jurisdictions in those hubs I referred to before. But primarily, it's a consolidation of the KCGM super pit for the first time in the asset's 125-year history. Leading growth metrics, as I mentioned before, organic growth from 1.6 to 2 million ounces per annum. This is very low capital intensity relative to the sector, and Tonks mentioned at the outset about flat as a new up. Globally, companies are having to invest a lot into future growth, into new assets, new provinces to maintain global production. We can do this through organic growth. Value creation, some aligned management. So we've got 2 companies coming together with a combined ownership of over $200 million, which gets us very well aligned with our shareholders. Significant synergies, I mentioned at the outset, so $1.5 to $2 billion NPV of synergies, and Bill will talk a little bit more around some of the processing facilities synergies that we haven't fully evaluated, which we see further upside on that number yet. And its relevance for us. So we've become a top 10 global miner with assets exclusively in Tier 1 jurisdictions. And we've become relevant not only to traditional gold owners, but also to emerging generalist funds, which is obviously a significant opportunity for the new Northern Star. As far as our asset centres, I mentioned before, so Kalgoorlie operations, you can see there, the green shape being KCGM, is in the heartland of Kalgoorlie where we are at the moment. So 5 key gold endowment districts and belts with 4 processing facilities. In 1989, KCGM was formed, which was consolidation of the Golden Mile. This is actually the true consolidation of Kalgoorlie, and hence the name Kalgoorlie Consolidated Gold Mines will live on and will be referred to as that entire operation. The Yandal operation strategically locating all of our processing facilities along that entire belt, and across the significant growth opportunities we see with significant grade upside and growth potential coming out of North America. Pogo is a postage stamp, and we see significant opportunities to grow that as we move forward as well. Just as far as those operating centres I mentioned before, Simon Jessup, as part of our DD team, actually went over to Pogo to visit the operations during DD, and his feedback was the excitement from the team on the ground is palpable. You can absolutely see the upside, can absolutely see the grade, and Northern Star's done an outstanding job to manage through the COVID pandemic, and on the other side of that we see significant growth, and we're absolutely aligned to that growth to 300,000 ounces. Once we've done that, we see that as a beachhead to further grow into North America as well. I'd now like to hand back to Bill to finish off the presentation.
Thanks, Ralph. Wow, what a combination of great companies. It's a fantastic opportunity. From Northern Star, we were super impressed, I guess, at Saracen's board, management team and workforce support of what has to be one of the most logical M&A deals in the mining industry in the past 1 to 2 decades. And why put these things together? Well, we mine resources, guys, and it all comes back to geological endowment. Geology has always been our #1 gateway to any merger and acquisition activity in the history of both companies. And like Rel said, we're not just consolidating KCGM, we're consolidating the town of Kalgoorlie and surrounds, which is just unheard of. When we look at a +1 million ounce production hub globally, there's Nevada, then there's Northern Star and Saracen's combined Kalgoorlie operations. That is stunning to be under a company our size. In excess of 110 million ounce gold endowment, they're the ones you want to own. When we look at Jundee and Bronzewing, the Yandal hub, that's around about 30 million ounce gold endowment, and it's only 30 years young, so it's got a lot of growth left in it. And Pogo, as Stu said early on, a +10 million ounce endowment, and it's only 14 years young. That will end up being a district scale camp. And when we couple these assets with excellent infrastructure, we've got over 24 million tonne of combined processing capacity, and operated by what I deem, and I think industry does, we've got world-class management and operating teams by both Saracen and Northern Star. That's going to yield spectacular returns across this asset base. And some people have asked over the last few days, how can you do a deal of this scale? You must have total alignment on culture and sustainability. It's very, very important. Both Saracen's culture and Northern Star are really well aligned. We're fully aligned in our approach to sustainability, and the companies were founded on very, very similar principles and have been instrumental to their success. And I've probably been in awe of Rel. He has really copied us in the last 3 or 4 years, to the point, I remember years ago, he rang me up if he could cut and paste our quarterly reports, and I said, no dramas. I stole them off Silver Lake anyway. And look, one of the things that was really evident through our due diligence was there was some idiosyncrasies and small, changes in how we operate the business, which, again, putting together is so compelling. But the way Saracen team addressed the opportunity was looking at all the risks, whereas Northern Star looked at all the opportunities. So blending that risk and opportunity culture in, I think, is going to create an absolute mega opportunity for every stakeholder associated with this business. And quite often, unfortunately in industry, soft issues can get in the way of the best deals. Look, not here. Both boards nailed this, and I'm not kidding you, in about a single hour meeting. It must have been Rel trying to push me into early retirement. But I've got to thank the boards for that, and I'll get there. So look, the board management team really reflects the combined skill set. There really was no losers in this on a higher level. The board will be split up with 5 Northern Star directors and 4 Saracen. And I'd like to thank Samantha Tuff, Martin Reid and Rorik Smith for the journey on Saracen and getting the company to this position. I'll stay on executive chair at this point of time, and Rel will obviously commence as managing director, and the non-exec chair, Tony Kiernan from Saracen, will come on board as the lead independent director. Our future intentions, though, as I said, is Rel's pushing me out the door into a non-exec chair role mid-next year, just so I can ensure that logical and sensible transition of both companies into one vehicle. Rel's intended to be the managing director for 12 to 18 months, and then transition to an executive director role, handling our corporate development, investor relations, and obviously he's very passionate about the big girl next to us here, and that open pit mine plan looks fantastic, and there's a bit of work to do on that to deliver that. And then at that time, on that transition, we'll amalgamate the CEO and MD roles, and Stu Tonkin will take over as the MD. One of the really important things, as Rel said, is there's a lot of ownership amongst these combined people. You know, $200 million worth of equity in board and management teams is pretty unheard of, and that's a fantastic result. And again, the commitment from the Saracen executives and management to escrow voluntarily their stock that would have changed on control is a massive endorsement of the deal and a massive endorsement of where the vehicle is going. From Northern Star, I'd like to expend a great thanks to Peter O'Connor, who will be one of the casualties coming off our board. Peter's been on the journey for the majority, I think about 8 years, and probably the most sprightly 78-year-old I've ever come across. Actually, I think you're a bit older than that, Peter. I think you're 80 in the next month. Yes. So sorry, but Peter's done a fantastic job and been brilliant for myself and the senior management on his counsel and guidance and overseeing on the board. As Rel said, you know, there's compelling synergies, and we outlined about $1.5 to $2 billion of pre-tax synergies that we delivered over the next decade via this very unique M&A. This is M&A that pays. When we look at it, procurement, you know, we are a very big business. I think we've got 5,000 combined employees on this. You know, we'll be spending something in the order of $10 million every day, day in, day out. So combining the 3 entities, you know, KCGM, Saracen and Northern Star, obviously is very good for the combined business, but it gives us a bit more buying power. A lot of corporate savings and obviously bringing Saracen into Northern Star. Tax consolidation has benefits to the combined entity. And one of the things Rel briefly touched on is the mill optimisation strategy. It was really probably lost in the deal last week. I think we only had 30 or 40 mil in the MPV on that. We have, you know, as I said, 25 million tonne per annum capacity up and down the belt of the goldfields. We've got 49 million ounces of resources. So there's a body of work to do here over the next 12, 18 months for the team to really look at, you know, as Rel said yesterday on the site visit, start with a blank canvas. What would it look like if we had no processing plants? And let's start building back up. So I'm sure that figure, when we work that out in the next 12, 18 months, will probably dwarf what we've just put out to the market. And look, as the Premier said earlier this morning, we're in the best business district. Where do you want to be in the world right now? And there's none better than Western Australia, and I'll say more importantly, in the city of Kalgoorlie, Boulder. Yeah, what a ripper town. And look, this what we've created, it's, as Rel said, we're located in Tier 1 jurisdictions. And this merge co really creates a large cap exposure. We're one of the only large caps with 100% of our production in Tier 1 jurisdictions, and we can't underestimate how lucky and fortunate, as you've heard today, by living in Western Australia. Sort of lastly, it's not about getting bigger for the sake of getting bigger, but we are getting rewarded on that. We're now the 6th largest, we will be the 6th largest gold producer by market cap, and we're the 8th on a production basis and growing, and we'll further go up the tree as we hit our 2 million ounces in the coming years. So we're super excited about what the combined company can do for all our stakeholders. And as the Premier said this morning, it's time to bet big on WA. I'll add, it's time to bet bigger on Northern Star and Saracen. Thank you very much.
Thank you very much, Bill. Thanks, Raoul, and thanks, Stuart. Okay, what we'll do is I'll just start with one question to get us going. And it's what's it going to take, what steps is it going to take to turn Kalgoorlie into a 1 million ounce plus producer?
That was a quick handball, wasn't it?
Look, we've already mapped out pretty clear under the division of our Chief Operating Officers as well. So Simon Jessup will lead the Kalgoorlie operations and Luke Cray will lead the Yandal plus the Pogo and our contracting arm. But in Kalgoorlie, the 1.1 million ounces is really the combination of mapping out KCGM back up towards your 675, 700,000 ounces over the next number of years, as well as maintaining our Kalgoorlie operations at 300,000 ounces and the addition of the Carosue Dam operations into it. So the luxury is 24, over the group, 24 million tonnes per annum milling capacity across the group. A large chunk of that is within 150 kilometres of this hub of the city. And so you've got a great network of haul roads, you've got mineralogy that will be better suited in different plants, whether it's free milling or it's refractory or otherwise. So all these things is really been the synergies that put there is the best ore in the right mill, improved gold recovery. So yeah, 1.1 plus, really an achievable mapped out growth plan over the next 2 to 3 years.
And in a similar vein, the key steps in getting Yandal to 600,000 odd ounces?
Yeah, so look, both businesses had plans on what they were doing with each of the Thunderbox operations, as well as what we had up in the acquisition of Echo, which was kind of a bit dwarfed by our acquisition that fast followed with KCGM 50%, but shouldn't be forgotten as to what that is. And if you go back to Mark Creasy stitching together all of that Yandal belt and going through Great Central Mines, Normandy, Newmont, many of our team, including myself, run those operations, Mount McClure, Bronzewing, and it was all part of the one system. So to be able to stitch all that back together, and we closed those operations when the gold price was around about $500 an ounce. So to be able to bring all those back into commercial production, we've got the capital assigned to it, we can see the resources, we're doing the optimisation work. The next 2 years is really a clear pathway to get Jundee Yandal operations to 400,000 ounces. You bolt together Thunderbox in that and 600's as well achievable.
Thanks, Stuart. I've got a question from the Canaccord Locked Down Melbourne team. Can Raoul or Bill please provide details and examples of where the circa 1.5 to 2 billion biosynergies and savings will come from?
Yeah, so we've outlined that in fairly good detail into the call, and obviously there's a slide hopefully that the guys have got there to give you that further detail. But what I actually will focus on is a bit that's not in there, I think, that Bill talked about. So it's $36 million of NPV attached to processing optimisation, and I think just touching on the point that Stu was just going through with Yandal. So Thunderbox operation is one of the lowest, or it's actually the lowest cost mill we have in the portfolio, if agreed by shareholders. It's a very fine grind, very good recovery. So something like a Aurelia can come down to the south, Julius to the north up to Jundee. So the optimisation of those sorts of opportunities has not categorically been included in that synergy value. So I think we'll continue to evolve that. We're very mindful of not articulating those plans too early, because like anything, you obviously want to optimise and you might come up with a better solution. So we didn't need to go there. They're the type of opportunities that we see as we combine our two teams to be able to fully unearth in the course of the next 12 months.
Thanks, Raoul. We'll take a question from the floor, and if you could please introduce yourself when asking a question. And while we're thinking about a question from the floor, we've got a question which has come across. What would be the drivers for diversification from gold for the merged Saracen Northern Star entity from Ivan Heron Echo Road Hero?
Look, we're gold only at this point of time, so merging two companies together takes time and effort and patience. So we're not planning to go and diversify in another commodity. That said, we have some pretty good nickel stuff in the combined entity, so that's not. So we might be into battery minerals soon, but look, gold's a focus, and that's where we're staying at this point in time.
And do we have something from the floor? While we're thinking about it from the floor, we'll move to Miles, who asks, with the bulk of the combined 1 management team being graduates of the West Australian School of Mines, which is just down the road, you must all be very proud that you're extending the mine life at the Super Pit, which is a massive employer of people in Kalgoorlie.
Oh, look, you know, we've got all sizes and makes in the combined entities, and not just the School of Mines. Everyone thinks we dominate that, but our Chief Operating Officer is a UQ graduate, so we do let some outsiders into the state and into our business. But no, look, it's a fantastic opportunity, with what has happened on the reserves and resource update at KCGM. The approval we got on the weekend, extending the life and underpinning, not just the operation, but a big chunk of underpinning the town of Kalgoorlie. That's a huge win for the School of Mines. Obviously, we're very passionate about it, but it's not. It goes beyond that. Only 10% of our workforce are actually technically disciplined people of mining engineers, geo-surveyors or metallurgists. The bulk of our workforce, 90%, are tradespeople and blue-collar workers in underground miners and open-pit miners. So it's not just about that, it's apprenticeships, and great to hear the Premier announce 400 apprenticeships for TAFE here. We've been a large contributor of that over the last couple of years, so it'd be great to get kids and keep them in the community.
Thanks, Bill. I think I'll just keep going. Can you expect the upside at Mount Charlotte and underground in the immediate surrounds? Any upside?
Absolutely. There's a 1.9 million ounce resource, and obviously, we are holding the asset for the time we've had, moving it from kind of 2 years of reserve life out to, there's 510,000 ounces of reserves at Mount Charlotte. So you've got the main Mount Charlotte ore body, you've got a lot of additional near headframe deposits there with Hidden Secret, Cal East, Little Wonder, and that's laterally as well as at depth. But we talk about the Golden Mile, but it's a mile deep, it's a mile wide, it's 5 mile long. It just keeps on giving. So as far as potential, Emma and the team are going to get an expanded budget. It sounds like I'll see that form when it comes through shortly. But ultimately, you drill, you find, you mine, and when you're sitting on top of 80 million ounce historic endowment, it's pretty easy to find and add more ounces.
Thanks, Stuart. Is there a cooling off period for the merged company, or will you consider further add-on bulk acquisitions sort of immediately?
Oh, look, it's, we've obviously got to complete this deal, and Saracen shareholders have to vote on what is a very compelling transaction. But look, it's, we've always said that we mine resources, and you've got to keep looking at that pipeline. So we've got great infrastructure, but I'll come back to it. We've got 49 million ounces in resources, 20 million ounces in reserve. We've got a body of work to do internally to really sort out and optimise that opportunity. So that will be the main focus, but and we'll go from there.
We've got some more questions coming across here which I can ask, but there's only a couple more minutes and just one from the floor.
Thank you, Julian Burridge. I'm asking a question. Can you tell us a little bit about your hedging strategy on the price of gold? It's an interesting question now that gold is at these levels. Thank you.
Yeah, sure. So look, directionally, Saracen actually has quoted, so we've been around a third of our production spread over 3 years. We have directionally indicated we'll decline that, so we're down to 25% directionally as Saracen, and certainly if you look quarter by quarter, Northern Star's been trending down as well. So like anything, hedging's used to underpin your cash flows. So for us, as we go through a growth phase, which we are at the moment, we'd like to see that underpinned with our hedging strategy, but then obviously as we roll forward, get that production up, in this case as a merge co to 2 million ounces, we could definitely see that hedging profile come off.
Thanks, Raoul. Last question. Will there be some consolidation of mining contractors across the assets?
We like competition.
Look, when you look at it, we actually use a lot of the similar business partners, to be honest. We don't like referring to contractors, but we've got Burncut at Jundee, Burncut at Carassodan and Thunderbox, so there's a lot of commonality. We do a fair bit owner-operator on underground as well, so we don't see any there. Obviously, we're a bigger client, and I'm sure there's a couple of Burncut team in the audience. So, but the good thing about Northern Star and Saracen is we've got a combined skill set that can do open pit or underground, both owner operator and contract management. So probably the biggest winner out of it is one of our haulage partners that cuts all the ore around the country. That's probably the biggest beneficiary of the combined business.
Okay, well look, we've got some more questions coming through, but unfortunately we've run out of time. And it's a very exciting operation you guys are putting together. I think everyone in the room is very proud of what you guys are doing for the state and for Kalgoorlie. And so on that note, thank you Bill and Stuart and Raal and Morgan for coming along and presenting what looks to be a pretty fabulous opportunity for everyone. Thanks.
Thank you.
Thanks.